Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector. Welcome. Glad you're here. Here's my agenda for today, Wednesday, August 14th. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. There were some good setups today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items. So for today, CPI came out. Yesterday, PPI came out. There was a very strong market reaction to PPI. More about that in a few minutes. We'll take a look at that. Today, CPI data came out, and it was mostly in line. The year-over-year number shown on the top here was slightly less than expected, slightly less than the previous release number, and the others were in line, the core CPI and the month-over-month. All right, so that's CPI. We'll take a look at the reaction to that in just a minute. And tomorrow coming up, retail sales at 8:30 a.m. Eastern Time And jobless claims at 8:30 a.m. Eastern Time. Jobless claims used to be a low impact event, and last week it was a very high impact event. Then Friday, wrapping up, building permits at 8:30 a.m. Eastern Time. Also housing starts, 10 a.m. Michigan consumer sentiment. And then Friday is also the monthly options expiration. The last time I checked, it was pretty much evenly divided between puts and calls. All right, so that is the news items. Now let's move on to the S&P 500. We'll start with positional analysis now. Again, the S&P 500. This is the reaction to the 8:30 a.m. Eastern Time CPI data release, up and down. SPY 541 volatility trigger on the low end, and the SPX 5450 resistance. So that was the reaction to the CPI data. Pretty choppy price action today. And again, we'll take a look at the reaction to the PPI data yesterday that came in lower than expected. All right, so again, this is the ES futures in Bookmap. And before I take a closer look at this chart, I do want to take a look at a higher time frame. I'm going to go to SPX, the underlying index. We've seen this chart before. Big rally last year. Correction began this year, April 1st. Rally resumed the Monday after the April options expiration. I've been looking at this as a potential analogy for the August expiration. So let's move on to more current prices. Current correction began on July 17th. That was Wednesday, July 17th. That was VIX expiration 3 days before the July monthly options expiration. Then price action has been mostly down, but pretty choppy. After that, correction began, and this is the Friday, August expiration. All right, let's pick this up with a 1 hour chart now. Again, SPX, 1 hour chart, 30-day 1 hour chart. That previous chart, the 1 day chart, was Thinkorswim. This is Thinkorswim also. Again, a 30-day 1 hour chart. Correction began Wednesday, July 17th. There's the Friday options expiration. Low so far was last Monday, that big drop last Monday that everyone was talking about. Low of the day right at the very bottom of the gamma curve. I talked about that last Monday. I think, unfortunately, due to technical difficulties, that session was not recorded. Price moved up, found support at the 5,200 call wall. Now the call wall has moved up to 5,300. Last Friday, SPX found support at 5,300 and now continues to move higher. So this current move higher really began last Thursday, again with the jobless claims. All right, let's take a look at the levels on this chart. The dashed purple lines are showing the lower and upper weekly expected move. Note SPX, it has been trading above that level. We'll take a closer look at that in just a minute. All right, so that's the lower and upper weekly expected move. Currently, SPX looks like it's right above the upper weekly expected move. That's based on the options market. Based on the closing price for SPX from last Friday, those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price for SPX from yesterday. Note I do post those levels in Discord every day the evening before. And SPX, again, trading right around the upper weekly expected move, but within the range of the lower to upper daily expected move. All right, let's take a look at the Spotgamma levels on this chart. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, the put wall at 5,300. That recently has been moving back and forth between 5,200 and 5,300. Currently it is at 5,300, same as yesterday. And above that is the volatility trigger. So the put wall is a strike with largest net negative gamma that can be expected to act as support. And again, above that at 5,400 is the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with a price to hedge their delta exposure, and that tends to enhance or increase volatility. And note that has been the case pretty much since this drop on July 17th. In negative gamma environment, now SPX trading above the volatility trigger. We'll take a look at the gamma notional on the market maker's position on the gamma curve at the beginning of the day in just a minute. All right, so again, SPX trading above the volatility trigger. So in this case, market makers would be trading against price to hedge their delta exposure. All right, so again, below volatility trigger, market makers trading with price. Above volatility trigger, market makers trading against price. And that level did move up from yesterday. So volatility trigger moved up. Put wall remained the same. Then the call wall is at 5,500 now. And that's also the absolute gamma strike. So the absolute gamma strike is a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And again, it's also the call wall. That's a strike with largest net positive gamma that can be expected to act as resistance. So note the range, which has been recently, as yesterday, well, let's see. Well, yesterday the call wall was at 6,000, so now moved down to a more realistic 5,500. So, and also the absolute gamma strike was at 5,000. So yesterday that range was 5,000 absolute gamma strike to 6,000 call wall. Now that range has narrowed very significantly to the put wall at 5,300 and the call wall absolute gamma strike at 5,500. All right, so again, volatility trigger, absolute gamma strike shifted higher, call wall shifted lower. And for SPY, the put wall shifted higher. All right, let's wrap up our view of SPX with a 1-minute chart. I'm going to zoom in. What I wanted to show here. Here's the put wall, 5,300. That was the put wall last Friday. Acted as support. All right, now let's just zoom in on last couple of days shown by the dark shaded portion. So you can see SPX has been trading up and down around the upper weekly expected move, that level, pretty sticky today. That's shown by the dashed purple line right here, upper weekly expected move, and also trading above the volatility trigger at 5,400. All right, that's SPX for today. All right, let's move on to Bookmap now. So this is Bookmap, and I look at price, as you can tell, in terms of SPY and SPX prices. I mark those charts on my Bookmap chart. I have my own cloud notes. There's the 5450 level. That is the level that acted as resistance right at 8:30 with the data release. So again, that's SPX, 5400 level below. I also have SPY levels on this chart. Here's the SPY 541 volatility trigger. Again, that level acted as support. And just below that, price did breach that 541 volatility trigger, moved almost down to the SPY 540 absolute gamma strike. So those are the key levels in play for today. So really on the downside, SPY 540 absolute gamma strike, and on the upside, the SPY 545 level. That's a large gamma 4, 0 gamma level strike. So 540 on the downside and 545 on the upside. And this looks like just above that is the SPX 5465 level. That was noted as resistance. So those two white lines, 545, the lower line, and SPX 5465 on the above the 545 level. All right, note there is a difference in price between ES and SPX. I'm using 24 today, so ES minus SPX, that offset, is 24 points. So I'm showing SPX 5450 at ES 5475. And I do post the index relationships that I'm using every day in Discord. All right, so those are levels of play for the S&P 500. We'll talk about setups in a few minutes. And I did talk about shifts. All right, let's move on to NASDAQ now. This is the NQ futures and Bookmap. And I want to take a quick look at the underlying index charts. This is QQQ. Key levels in play for today. Put wall at 459. More or less acting as support. And just like SPY, the QQQ 0 gamma level acting as resistance at 465. So the range for QQQ, 459 on the downside, 465 0 gamma level on the upside, volatility trigger in the middle there at 461, recently acting as support. And that's a large gamma 2 level just below that. Or actually a combo level just above that. And then 460 is a large gamma level. All right, so those are the QQQ levels. All right, so again, most important, put wall on the downside, 0 gamma level on the upside. QQQ is trading above its volatility trigger. All right, let's take a quick look at NDX and then we'll get back to Bookmap. NDX. Zoom in just the last 2 days. So NDX, 19,000, very important level. That was the top end at the close yesterday. That's the absolute gamma strike, L1, absolute gamma strike at NDX, 19,000. Resistance level, closing price yesterday. NDX did gap up above that level, moved down lower to this combo 1 level, combining NDX and QQQ, gamma weighted open interest, and then now finding resistance at the 19,000 absolute gamma strike. And note NDX is also trading above its volatility trigger. All right, let's go back to Go back to Bookmap now, NQ futures. So just like ES futures, S&P 500 futures, I have my own cloud notes here. So I can show NDX levels. There's that 19,000 absolute gamma strike. And then here's the QQQ levels in play. 459 put wall. On the downside, note that combo level, NDX combo level, just below that. And then the 455 zero gamma level, just above that. Then right at the data release this morning, the QQQ 464 acted as resistance, and the 460 large gamma 2 support. All right, so those are levels in play for today, and the levels are working very well in NASDAQ and the S&P 500 today. And again, we'll take a look at setups in just a few minutes. All right, shifts in levels for NASDAQ. For NDX, the volatility trigger and put wall shifted higher. Same for QQQ. Volatility trigger, put wall shifted higher. Call wall shifted lower. Still well above current prices. And the absolute gamma strike shifted higher. So overall, fairly slightly bullish shifts higher in levels for the S&P 500 and the NASDAQ. So the only levels that shifted lower were the call walls for SPX and QQQ. All right, let's wrap up positional analysis by taking a look at gamma notional. This is the data table at the bottom of the Spotgamma AM Founders Note. I'm going to take a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note, with the exception of NDX, these numbers are negative, much less negative than the last few days. So really slightly negative to neutral, and especially for SPX. And again, these numbers did shift less negative or higher than yesterday. So not as much of an effect of market makers trading with price in this slightly negative gamma environment. And let's just take a quick look at the Vanna model, then we'll get to some setups. What this chart is showing is market makers delta notional. This is their delta exposure on the vertical axis, the price for SPX on the horizontal axis. There are two curves on this chart. The light gray curve shows how market makers delta notional may change with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and applied volatility. And that change in delta with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. So that is the line that we always want to take a look at. All right, let's take a look at prices. So the only thing I want to point out today is where this line is still, this curve is still typical of a negative gamma environment, although not as steep as yesterday. Let's just compare that last 2 days. Notice how that is yesterday. Then today, this curve is starting to flatten out. And I'm talking about this area right here, indicating a less pronounced Vanna effect with current prices. So let's just take a quick look at, here's 55.50 to 5,500. So really there's not much of a Vanna effect, and that there is under, there's a right about 5,500 So below that level, there's more of a little bit more of a Van effect. As price moves up and down, market makers' delta notional will change, and they'll be trading with price, but still less pronounced than the last few days. All right, let's move on. Let's take a look at some setups now. I'm going to start with the S&P 500. And as always, I'm going to take a look at what options traders have been doing today. So everything that we've looked at so far, other than the Bookmap, is based on static data. Spotgamma takes open interest data, applies their algorithms to that data to come up with the levels. And I track how those levels change every day, as well as the gamma notional and many other metrics. All right, so now let's move on to execution, move on to real time, so we can take a look at some setups. So again, I'm going to start with what options traders have been doing. This chart is the HIRO signal, H-I-R-O, Hedging Impact Real-Time Options. So what this chart is showing is options trades of market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. And this chart is available to Spotgamma subscribers. There are two lines on this chart. The first line is the price for SPX, and the second line, the purple line, is the HIRO signal. Again, that's H-I-R-O, Hedging Impact Real-Time Options. A falling HIRO signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. A rising HIRO signal indicates traders are taking positive delta positions. They are buying calls and or selling puts. And again, this is the S&P 500 index signal, showing options trades of market maker hedging activity in real time for SPX, SPY, XSP, and ES futures. So that is the first S&P 500 signal that we can take a look at. The second is this S&P 500 equity signal. What this chart is showing is options trades of market maker hedging activity for a combined signal of all 500 stocks in the S&P 500 index. Typically, this signal is a little bit smoother than the index signal. There's a lot more going on here, but both are providing very good signals today. So let's take a look at the equity signal. And actually what I want to do, let's start with this. I'm going to shift to puts and calls. Let's go back to the equity signal so we can. All right, so we've seen the total signal. Now let's take a look at the signal with calls and puts separated. The orange line is showing calls. A rising orange line indicates traders are buying calls. Market makers sell the calls, and they have to buy, in this case, futures to hedge their delta exposure. And the blue line is puts. And a falling blue line indicates traders are buying puts. So the directional lines are shown in terms of delta. All right, so this is the index signal. And note how this was basically bearish, traders taking negative delta positions until about 10:35. So traders, and there was some shift right around 10:15. Then another leg lower, down to 10:35. Then price reversed higher. All right, let's take a look at the S&P equity signal now. Zoom in on that. Pretty similar story. I think the only, actually one important piece of information on the equity signal here is this put line, the blue line, really didn't reverse higher until 1035. So that was your clue that this was not the final reversal higher. There was one more leg down. And then now notice 1035, traders start buying puts, selling puts and buying calls. So for the most part, until 1030, traders were taking negative delta positions. That reversed at 1035. Now the blue line, orange line moving in sync. Both up. In that case, that's a bullish signal. All right, so that was the best signal. So let's go take a look at the S&P 500. Go back to S&P 500. Zoom in, actually. I'm going to zoom again. All right, so remember from the cash open 930, until 1035. Options traders were taking negative delta positions. Remember, the key signal was the put line on the S&P equity signal. So this move higher was kind of a head fake. And then the reversal higher. So let's take a look at the clues in Bookmap now. First of all, notice what large traders are doing with iceberg orders, shown by the rising light blue line on the subchart, also the on-chart indicator. This is very typical price action of large traders using iceberg orders to hide their size. They will buy weakness and sell strength. So in this case, they were buying weakness all the way down until this reversal higher just above the 540 absolute gamma strike. Other clues in Bookmap: the volume dots are showing market buy minus sell. These are the aggressive buyers' market orders. Magenta dots indicate there are more sellers than buyers. Green volume dots, more buyers than sellers. So this was kind of a kickoff by the large traders with iceberg orders. They get filled, and then as price starts to rise, aggressive buyers start to come in, as well as options traders buying calls and selling puts in the S&P 500 equities. Looking at the subchart again, this cumulative volume delta that changes from magenta to dark blue as it shifts from negative to positive shows starts to rise, as well as the yellow line that shows buy stop orders helping to fuel the move higher. So cumulative volume delta, aggressive buyers coming in, sellers are exhausted, traders are taking options, positive delta options positions again, buying calls, selling puts, aggressive buyers, and price moves higher. And that move that began right around 1035 continued all the way up to these two levels, the SPY 545 and then the SPX 5465 resistance level. Again, that was noted as resistance in the Spotgamma AM Founders Note. All right, so that is the S&P 500. I think pretty easy read today, both in the order flow and in hedging flow and hero. All right, let's move on to NASDAQ. And let's go back. Let's start with options trades and hero. I'm going to zoom out. So close full screen. Go back to the total signal. We'll start with a NASDAQ signal. So similar to the S&P 500, there are two signals that we can take a look at for NASDAQ. This is the index signal, showing combined signal of options trades and market maker hedging activity for NDX and QQQ. So that is the index signal, providing a good signal today. And this is the Mag 7 signal. So this is equivalent to the equity signal for the S&P 500. What this chart is showing is options trades and market maker hedging activity for a combined signal for the magnificent stocks known as the Magnificent Seven. Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. Those are the stocks that I trade. So let's just stick with this signal. Shift to puts and calls. And I'm going to have to jump. So taking a quick look at NASDAQ, it did act as a leading indicator here. Note traders started buying calls, most likely in QQQ, before price started to move higher. So when they started selling puts, they were already buying calls. That is when the NASDAQ reversed higher. Let's take a look at the Magnificent Seven signal. And what this chart is showing, just like the S&P 500, from the open until 1035, traders taking negative delta positions. That suddenly reverses. They start selling puts, then start buying calls a few minutes later. Price moves higher. All right, let's go take a look at Bookmap now. Clean this up. Zoom in. So from 9:30 to 10:35, as traders were taking negative delta options positions in the Mag 7 stocks, NASDAQ made a nice series of lower highs and lower lows, multiple opportunities for entry. Then as the NASDAQ reached the QQQ 459 put wall and that NDX combo 1 level just below that, options traders started taking positive delta positions in the Mag 7 stocks. Aggressive buyers came in. No cumulative volume delta starts to rise. And then also buy stop orders help to fuel that move higher. All right, so good bearish setup from the open until 1035. Price reverses higher at the 459 put wall, does its job and acts as support as expected, and NASDAQ moves higher. Now chopping around right under the 19,000 absolute gamma strike. All right, let's take a look at some stocks. First stock I want to take a look at is Google. Bearish morning in Google alongside the The NASDAQ. Let's zoom in on this. So I have puts and calls separated. This is the put line right here. These vertical lines are large institutional orders. Whoops. Large institutional block order, selling puts. Then someone came in a few minutes later and bought puts. So net, not a whole lot of difference in the put line. So really you can just shift this portion. Down to here. All right, so in the morning, traders were selling calls, buying puts. The flow alert that comes in right after the open gets your attention. You see the blue line, orange line moving down, looking for a short setup. So let's go to Bookmap now. Sharp drop this morning in Google as traders were taking negative delta options positions. Oops. Note as price finds support right around 158, aggressive buyers finally start to come in. You can see the rising cumulative volume delta. Price moves up to 160. That is the put wall. And price finds resistance at the 160 put wall. So price breached that 160 put wall, now finding resistance and trading below VWAP. All right, let's go back to Hero. Here's the 160 put wall. Price sliced right through that, then found resistance at that level, and now consolidating right below that level as options traders have taken their foot off the gas. So not the smoothest hero line in this case. Takes a little bit more study and interpretation. But did provide a very good signal this morning. All right, so that's Google. All right, Hector asks, at call wall is net positive gamma? Yes. So for an index, Spotgamma assumes that traders are short calls, market makers are long calls. Calls could be long or short. So of course there's some of each, but again, the assumption for an index is different from a stock. All right, so Hector asks, could be disguised like icebergs do. So the Spotgamma levels are based on open interest data. That's open interest at different strikes. And icebergs are limit buy and sell orders with an iceberg type. That's a market buy order, MBO type. So that's different. That is, there's no way to disguise open interest. So there's really no relationship necessarily between icebergs. Those are limit buy and sell options, futures orders, and the walls, the Spotgamma levels are based on gamma weighted open interest. All right, that's Google. Let's take a look at Meta. Meta 530 call wall in play today. Let's go take a look at Bookmap. Go to Meta. Choppy day in Meta. Pretty wide range. 530 call wall kind of in the middle there. Let's go back to Hero. So in the morning from the open, traders were selling puts and buying calls. Flow alert comes in just a couple of minutes after the cash open. Then right around 10, as price was trading above the 530 call wall, traders started buying puts and selling calls. Price moved down below the call wall. Found support right around 526. Again, traded above the call wall, now trading below. Let's go take a look at Bookmap. So Meta is trading with options trades today. Again, call buyers and sellers, put buyers and sellers, driving price. Looks like mostly calls, especially this leg down that began right around 1205. As price once again traded above the call wall. Let's go to Bookmap. Sorry. So in Meta, pretty choppy morning. Actually, let's take a closer look. So Meta broke below VWAP right here, made a lower high, broke this trend line, this wedge pattern, made a series of lower highs, then broke this downtrend line, found support, like I said, right around 526. Note the liquidity. They came in just below 526. Those are limit buy orders. Price found support there. Moved up above the 530 call wall again. Then made another sharp trend break. That was just after 12 noon as traders started taking negative delta positions again. Slice right through the 530 call wall. And now it looks like it has found support right around 525. All right, that's Meta. Let's take a look at Microsoft. Let's first take a look and see what options traders have been doing. This is actually pretty typical of Microsoft. Large block orders come in. In that case, that's a large institutional order, block order of some large trader selling puts. All right, I'm going to zoom in on the hero signal so that large block order doesn't obscure everything else. All right, so in the morning, traders were selling calls. That was, and they were net The put line was pretty flat, so they were selling calls. Note the flow alert that comes in just after the cash open. That was right before the call line reverses. Interesting alerts here in Microsoft today. So again, let's focus on mainly the call line. So the flow alert comes in. That was near the top this morning. Actually, let me switch to the total signal, see if we can provide any more clarity. All right, so this flow alert comes in. Sorry about this vertical line obscuring everything. Flow alert comes in. That was near the top this morning. Another flow alert comes in near the bottom, just right after 10:30. Flow alert comes in the morning. Hero signal moves lower. Short set up. Microsoft makes a series of lower highs and lower lows. Flow alert comes in just after 10:30. Microsoft reverses higher. About the same time as the NASDAQ reversed higher, also the S&P 500. As traders take positive delta positions. So let's go back to Bookmap now. Microsoft makes a very nice series of lower highs and lower lows. And again, remember reverses higher as that alert comes in and traders start taking positive delta positions. And if you're waiting, here's a trend break right here, and Microsoft moves higher. And let's see what happened around noon with options traders. That's when they started taking negative delta positions. Then just before 10:30 started taking positive delta positions. Hero signal has flattened out, and Microsoft consolidating after the down move, up move, down, and now consolidating. Take a look at NVIDIA. Actually, I'm going to shift back to puts and calls. Back to NVIDIA. Zoom in. So in the morning, traders were selling calls and buying puts. That was for about the first 15 minutes. And the put buyers and call sellers took the foot off the gas. Price consolidated for about 50 minutes. Then they started taking positive delta positions again. NVIDIA began to move higher. It looks like mainly put sellers were driving price. Call buyers came in a few minutes later. So down consolidation, then up. Then just afternoon, put line, traders started buying puts instead of selling puts. Now the put line is leveled off. They also started selling calls. That line is also leveled off. Now NVIDIA is consolidating. Let's go take a look at Bookmap. Go to NVIDIA. So remember, down move, traders taking negative delta positions. Price finding resistance around 116. Makes a series of higher lows. breaks out of this consolidation at 116 as traders are taking positive delta positions. Options traders take the foot off the gas. Reverse, price moves lower, now consolidating right around 117. All right, the stock of the day, Tesla. So let's take a look at Hero first, and then we'll get to Bookmap. Let's go to Tesla. A couple of key levels in play for Tesla today. First of all, the call wall. Price opened right around the call wall. 207.50. Traders were selling calls, buying puts. Price moved lower. Found support right around the 200 key gamma strike. There's that level right there, 200 key gamma strike, and now is consolidating around that level. So price moved quickly from the 207 call wall all the way down to the 200 key gamma strike, and now is chopping around that level as options traders have taken the foot off the gas. Options traders buying puts, selling calls, take the foot off the gas. Both hero signals flatten out, and price chopping around the 200 key gamma strike. So it looks like this 207.50, that's the call wall. That was also the opening print right at that level. And then 200 put wall acting as support. And then now price trading just above that level. All right, let me check for questions. W. Black, welcome. Ask, would you wrap up with NQ? Sure. Yeah, we can take a look at that. And Rainy Days asked, welcome. Glad you're here as well. Could we take a look at Google? I looked at Google. That was the first stock that I looked at. Take a look at the recording. I already took a look at Google. So if you came in late, you can watch the recording. Hello, Stephen. Welcome. Glad you're here. No problem. Stephen asked, have you ever looked at crypto option? Does Durbit ring a bell? Not really, faintly. Been watching John Slaz's stream on crypto options. Sorry, no, I don't look at crypto at all. I do look at coin occasionally as a crypto-related stock that has a pretty active options market. But no, I don't look at crypto itself. All right, W. Black wanted to wrap up with NASDAQ, and last call for questions or stocks. So NASDAQ still range 459 put wall on the downside, 465 large gamma 3 level, 0 gamma level on the upside. And right now price is consolidating just about around the NDX 19,000 level. Note most of the volume today is just below that level. That's shown by that large volume in the session volume profile. Right there, just somewhere between 19,000 and a few points below, maybe the 461 volatility trigger, 461.50, and the 19,000 absolute gamma strike. Let's take a look at the NDX chart. So remember, I mentioned that level before, the 19,000. top end of that was the closing price, just above that yesterday, and then acting as resistance multiple times today. Again, volume concentrated just below that level. W. Black asks, is Vanna holding? I'm not quite sure I understand that question. Vanna, again, is a second order Greek, shows how delta changes with changes in applied volatility. So today, gamma notional at the beginning of the day was slightly negative, and we took a look at the Vanna model earlier today and saw that below SPX 5500 there would still be some slight Vanna effect, and of course if price dropped sharply lower, then that Vanna would come into more effect. Price dropped sharply lower, implied volatility increases, then there would be more of a Vanna effect. All right, so Horsepower wants to take a look at VIX. Sure. This is multiple days. So VIX has been moving lower since. And that was, and this is only 10 days. Of course, it was up at 65 that Monday with that sharp drop over the weekend. And this date is from the 7th, shown in this current range. VIX has continued to drop from a high of 29.76 down to today a low of the day, 16.42. But it is trading lower on the day. All right, so VIX trading lower on the day again right now, right around 16.54. And Abu wants to take a look at NQ Hero. All right, so we'll wrap that up. That'll be the last thing we'll take a look at. So we'll look at the NASDAQ signal first. I'm going to shift to the total signal since the call line is moving in one direction, put line moving in the other. So for the index signal for NASDAQ, has been trending lower since right around noon. So the index signal trending lower. Let's move on to MAG 7. MAG 7 really driving price. Sharp drop lower around noon, then right around 12:45. Options traders took their foot off the gas and price consolidating, so price responding more closely. And this price is shown for QQQ with the MAG 7 signal. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your great questions and comments today. And remember, coming up tomorrow, retail sales, jobless claims, tomorrow morning at 8:30. You never know what can move the market these days. Friday, 8:30 a.m., building permits, housing starts, 10 a.m., Michigan consumer sentiment, and of course the options expiration on Friday. There's an AM settlement for SPX, also a PM settlement. And then we'll talk about that on Friday afternoon. Everyone, thank you very much again for watching. Thanks for your questions and comments. Have a great afternoon, and I will see you on Friday. Bye.